Hi, I'm Mike Larson from Money and Markets TV. All this week, I've explained how the United States has made the same blunders that European leaders have, and taken the same steps towards economic doomsday that's now bringing Europe to its knees. First, Washington spent everything it could collect in taxes. Second, it borrowed all it could from citizens and spent that as well. Third, it borrowed even more from foreign governments, banks, and investors, then blew that too. Fourth, with the economy slowing and tax revenues plunging, it's just called its own ability to pay its bills into question. Now, in the fifth step toward financial doomsday, Washington is cutting its own throat by stiffing the very people who lend it the money it needs to survive. By cranking up the printing presses, Fed Chairman Ben Bernanke is declaring open war on the US dollar, degrading its value and its buying power. And the more the dollar falls, the less incentive foreign investors have to continue loaning us money, let alone to hang on to the treasuries and dollars they already own. As proof, just consider this. In 1999, the Fed printed $73 billion to prevent the Y2K bug from torpedoing the banking sector. Then, after the 9/11 attacks, the Fed did it again, printing $40 billion in new unbacked money. But since Lehman Brothers blew up in 2008, the Fed has flooded the world with a whopping $1.6 trillion in newly printed greenbacks. That's 22 times more than before Y2K, and 41 times more than after 9/11. Plus, it doesn't even take into account the Fed's two quantitative easing programs, which flooded the economy with more than $2 trillion of unbacked money. And the worst part is, none of those efforts have managed to spark real, sustainable economic growth or provoke a surge in hiring. All they did was inflate asset prices and send commodities through the roof, decimating Main Street America while enriching Wall Street fat cats. But Bernanke and his buddies at the Fed still haven't learned their lesson. They've indicated that they're ready to fire up the printing presses yet again. Albert Einstein famously said that the definition of insanity is doing the same thing over and over again and expecting a different result. But at the Fed, this insanity is considered sound monetary policy. Is it any wonder that the dollar just fell to an all-time low against the Swiss franc? Or that it's tumbling against the Japanese yen and the Singapore dollar? And is it any wonder that gold, the ultimate form of money, is now in record territory, well above $1,800 an ounce? Folks, this is the inevitable result of the Fed's trashing of the dollar. And now foreign investors are realizing that because US Treasury bonds are denominated in dollars, the simple act of buying them guarantees they'll lose money. So how much longer do you think they'll continue throwing good money after bad? These questions lead to an inescapable conclusion. We are now facing the ultimate financial doomsday that could plunge vast numbers of US families into the nightmare of poverty, homelessness, and hunger. The monumental event that will trigger this catastrophe is coming. We see evidence of it all around us, in the economic data and in the markets. So I'm going to rejoin you on Monday to tell you exactly what you should expect in the coming months. And I'll give you some crucial self-defense lessons on how to get through this disaster with your nest egg intact and actually use the crisis to build enormous wealth. This information is also available in our new free video, America's Financial Doomsday. I'm Mike Larson for Money and Markets TV. I'll see you on Monday.